Good afternoon, ladies and gentlemen. Hello, my fellow traders. I'd like to welcome everybody to another webinar. We had an amazing webinar yesterday. You had a lot of great feedback. We had a lot of people join yesterday's webinar. So a lot of people were interested in copy trading. A lot of people sent me emails saying thank you a lot in regards to helping us on how to choose copy traders. So if there is certain loopholes and certain limitations, you showed us how we can avoid those weaknesses. And I got a lot of feedback. If people today do have questions still about copy trading that you want to ask, then of course feel free to ask. I mean, the webinar was only yesterday. I'm more than happy to help anybody who has further questions, of course. Now today, like I promised, because yesterday people kept saying to me, I want a strategy. I want a strategy. I want to help on how to enter and exit the market. Keep in mind, guys, every single webinar is based on something different. For example, some webinars are based on risk management, in which case 45 minutes webinars last. None of that 45 minutes is going to be about strategies. So always remember, specific webinars have specific topics, of course. So it's always good that you're registering for the right webinar. Today is an amazing webinar because we're looking at trend-based strategies. So we're looking at trading the trend. We're going to look at more than one strategy in regards to how to trade the trend. Now, this is a very rare webinar because number one, yes, we are going to look at the theories. We are going to look at why it's important, what aspects can help us trade the trend. We are going to look also at the strategy on the presentation, but we're going to leave the presentation. We're going to go to the MT5 on the live market. Of course, keep in mind the US market hasn't opened yet, but either way, it's still something that we're going to do. We're going to go into the live market, live real-time trading, and we're going to look at these strategies so you can see step by step exactly what the strategy includes, so you 100% know how to use it and you really understand how you can benefit from using these strategies. Now, I've already got a lot of questions. Like I said, guys, in yesterday's webinar, these webinars, they are here in a sense as presentations, but it's not a lecture. Probably a lot of people have gone to university and remember they sit in a room, the lecturer speaks and nobody else is allowed to speak. Guys, I want this to be more like a conversation. If you're struggling with something, if you have questions, if there's certain aspects of your trading that's you're finding difficult, let's speak about it. Make comments, ask questions, we'll speak about it, we'll ask other traders, people will comment on it, and it will be a much more educational 45 minutes for you. I've got a lot of people saying hello, hello from Namibia, hello from Zimbabwe. We got somebody from the Philippines. You are up extremely late, but good on you. Well done for staying up to watch this webinar. I can see some people here from Latin America as well. Great, really good to see. But let's get started. As part of the first two slides, always it's the same two slides. I have it there always for maybe somebody that has never watched a previous webinar. I want everybody, of course, to be aware that these webinars are here for educational purposes only. They're not there for investment advice. We're not going to sit here and tell you here, buy, here, sell, and so on and so forth. It's here for educational purposes. Even though we're not giving investment advice and financial advice, we want to give as much educational material as possible in order for you to be able to, okay, today we're looking at trends, to look at the trend, identify, to be able to identify where the opportunity is, where potentially you are able to put stop losses, take profits, trailing stops. In addition to the technical analysis, what can you use to further increase the accuracy of the strategy as well? So these are all factors that we, of course, want to give individuals through this educational method. Now, a bit about my background. I don't like spending too much time speaking about myself. The main thing I want people to understand is I've been trading for 10 years. I've been in the financial service market for almost 11 years now, ladies and gentlemen. For those years, I was a financial advisor in London. I hold 2 licenses. I hold a CISEC license and a CMAP license, which is UK, and SciSec is of course EU. It's just a bit about my background. The main thing I want people to really know as part of that slide is, I want people to feel comfortable. Somebody here says the strategy only works on MT5. If you're talking about the strategy that I mentioned a few minutes ago that we're going to look at, of course not. A lot of people are trading via the mobile app. The only thing I will say is, of course, the MT5 is more advanced. A lot of traders, because of course there's beginner traders and there's traders which are beginners, but they've been trading maybe 4 months, 5 months, 6 months. Those individuals that I've been working with quite a lot and have watched a lot of webinars, have done a lot of one-on-one sessions, we look at how you can use best of both. There's very simple factors with using the mobile app. For example, if you're going to open a certain trade size, it will automatically tell you how much capital and margin is required. If you're putting a stop loss and take profit, it will show you automatically straight away what it means in money terms. So if I'm buying at $100 and I'm selling at $105, it will show it to me exactly the figure in money terms. So there is benefits to the mobile app. Of course, there's benefits to using MT5 as well, especially in regards to analysis. Of course, you can do both, ladies and gentlemen. You can do your analysis on the MT5 and be opening the trades and managing them via the HFM mobile app. So again, you can use best of both worlds. Now, before I want to start looking at a trend, I want to start to ease people in. We're going to start to look at this slowly, and really get more and more advanced, especially towards the end of the webinar when we go into the MT5. Then, of course, people need to be up to date by then. So a lot of people that I speak to, because I speak to a lot of traders. I'm not an account manager, but people can request to speak to one of the experts. They can request to speak to a market analyst. Like I said, I'm a licensed market analyst and financial advisor. People can request one-on-one sessions, and we can do some educational sessions. A lot of the time, I say to people, what's the thing that you struggle with? And they say to me, I look at the screen, I'm looking at the MT5, I'm looking at an asset, and I'm scared. And I'm scared because I don't know how the price is going to move. That's point number one. And point number two, the thing that scares me is a million things can happen. So it's not just I don't know how the price is going to move, but also a million things could happen. That makes analyzing the market from the very first outset very difficult. There isn't 10 things that can happen. There isn't a million things. There isn't 1,000 things that could happen. There is only 4 price movements that can happen when you're analyzing the market. So let's look at those price movements, because it's important when you're looking at the screen, you're analyzing. Yes, as part of the strategy today, we're going to look at predetermining how the market is going to move. In order, when you're able to do that, that's when you're able to be successful and consecutively successful, if you are able to determine how the market's going to move. But yes, that's 50% of the side. But the other side is you really need to say to yourself and learn that there's not a million things that can happen. There's only 4 types of price movements. If you're throwing a dice, there's less of a chance of you hitting your number because there's 6 sides than there is if you're, for example, trading. Because trading, there's only 4 things that can happen. Now, this is, and by the way, this isn't something which I'm personally saying. This is something which is, if you've studied economics, if you've studied financial services, if you've done your CMAP, your SciSec, your Sci-Fi, and all of these licenses, we've got people here that are professional traders, because we get a lot of professional traders join my webinars. This is something which is set in stone, it's a fact. So anyway, let's look at this. When you look at the market, here we got the Euro USD. It doesn't matter though what asset you are looking at. There is 4 types of price movements. We have the impulse wave. The second is known as a retracement. Some people also know it as the corrective wave. Then we got the correction, and then we've got the price range as well. So let's look at each of them step by step. Now, of course, here, ladies and gentlemen, we have a trend. Anybody can look at this. And to be honest, I don't like to look at past performance. If you can look at the past performance and say, this is a trend, that's useless. There's no point, and I listen to a lot of educators, because people send me videos, I'm watching, they say to me, I'm watching this educator, is he good? I'm watching this educator, is he good? All these educators, they look at past price movement and say, this is where you buy, this is where you sell. That's useless. The price movement has already formed. He can see how the price is going to move. If you're looking at for example, myself, when I've worked and visited trading floors, nobody's looking at a signal which happened yesterday and saying to themselves, this is a signal, the price moved in this way. No, that's useless. You're not trading in the past, you are trading in the present, and you're not trading not even in the present, you're trading in the present but trying to benefit from the future price movement. So you need to be able to determine how the price is going to move. Whether it moved in a certain direction in the past is useless, ladies and gentlemen. But anyway, let's go back to this. So the impulse wave, when you're looking at the trend, there is going to be 3 types of potential price movements. The fourth type is not necessarily truly part of the trend, but it is something which can take place. So for example, we've got a trend here, ladies and gentlemen. These waves, okay, some people know them as waves, some people call them swings, that's completely up to you. But these waves, ladies and gentlemen, these are known as impulse waves. The impulse wave, ladies and gentlemen, is the price movement which is moving in favor of the trend. So for example, this is an upward trend, and you can see all of these waves upwards. You will notice they're much larger than the downward waves as well. These are known as impulse waves. This is an example when the price is increasing in value. If the price is decreasing in value, the same thing applies. If it's a downward trend, ladies and gentlemen, these downward price movements are known as impulse waves. So this is a bearish impulse wave, this is a bearish impulse wave, and this is a bearish impulse wave as well. Now, the second price movement is known as the retracement. Some people, again, like I said, also know it as the corrective wave. They're the same, it's just different terminology. It's completely down to you which you find easier. But again, like I said, we're just easing you into understanding the trend. Knowing the names, knowing the theory, like I said, it's useless. It's not going to make you a successful trader. You're not going to be able to determine how the market's going to move based on just knowing the name and the theory. But we're easing you in. We're starting slowly. So that way, the thing which is going to be most important is when we go straight onto the MT5. So, like I said, we've got 1 impulse wave, 2 impulse waves, 3 impulse wave, 4 impulse waves here. Then these areas, ladies and gentlemen, is the retracement. Okay, so if you've got an upward trend like this here is the retracement. So there's smaller price movements and they're against the trend and they are temporary. Okay, so these are the difference between the impulse and corrective waves. Then the third thing isn't part of a trend. If you're seeing a correction, it means we're no longer in a trend, ladies and gentlemen, or that the trend has temporarily paused. So for example, this here, ladies and gentlemen, is known as a correction. Why is it known as a correction? What you will notice about impulse waves and corrective waves is, you got an impulse wave, then you get a retracement, impulse wave, retracement. These downward price movements are not moving back to the previous low. This downward price movement here, again, it's not gone back to the previous low. If it's gone to the previous low or below the previous low, it's not a retracement, it is a correction. Doesn't mean the correction is going to last forever or that the correction is going to lose all of the gains of the asset over the past year or decade or whatever that may be. It can be potentially temporary as well. So for example, here we got a high, then we got a high, then we got another high. Why? Because it's impulse waves. The lows as well are also again consecutively higher. Why? Because it's a trend and because we're seeing retracements and impulse waves. But when the downward price movement is so strong that it goes to the previous low like here, or is so strong like here, that again is going to go to the previous low. So for example here, and for example here, then indeed, ladies and gentlemen, it's a scenario that it's a correction. Now, the last thing is a price range. A price range is kind of just sideways price movement. A lot of the time, we tend to see price ranges just before news is about to be released, or when there's been news released that we see so much volatility that then basically everybody becomes uncomfortable buying any further and people stop buying, and it just creates sideways price movement. It's, for example, if I say to you, would you like to buy an iPhone for $1,000? Yes, okay, I'll buy it. Would you like to buy an iPhone for 1,100? Yes, I'll buy it. It keeps rising, keeps rising, keeps rising. At some point, you're going to say to yourself, sorry, but I'm not willing to buy that. And the price just starts moving sideways. This is known as a price range. So the first thing I want people to understand is these are the four price movements within the financial trading markets. If we are in a trend, we are seeing impulse waves, retracements, and price ranges, not corrections. If we're seeing a correction, then the trend is changing. We're no longer in a trend, or the trend is temporarily pausing. Somebody says here, can you please explain the correction again? Yes, if you get an impulse wave, so the price moving upwards like this, and then it declines slightly like so, and then it continues to increase in value, this is a retracement. Why? Because it's higher than the previous low. So one low is here, the swing low is here, the next swing low is here. So it's a higher low. But if we're seeing a correction, the price will go back to the previous low, like for example here. So a retracement is a temporary price movement. It's not an issue. It's still indicating another trend. We're still trading within the trend. But if we're trading and then there's a correction, we need to be cautious. Somebody says, can you please explain the price range again? Yes, of course I can. Of course, if anybody's got questions, even if it's something which is not related to this slide, feel free to ask, and of course I'll provide as much information as possible. If you're looking at a price range, for example, like I said, a lot of the time before news, we start to lose momentum and the price does something like this, because people say, wait a minute, I'm not going to buy, I'm not going to sell, there's news about to be released, I'm going to wait, see the news, see what it means, and then I'll decide if I want to sell or buy. Okay, that creates the price to move sideways. Why? Because the order flow book becomes very weak, and then, ladies and gentlemen, news is about to be released. People will either say, yes, that's great, I'll buy then, and the price will go, oh, apologies, let me go forward again, and then the price will go suddenly like this. If it becomes very expensive, then again, a lot of the time, the price may start moving sideways again. These here, ladies and gentlemen, are price ranges. If you still have more questions, I can see more people saying, can we get some more examples? To be honest, I want to continue because I want to really start looking at trends, to pinpointing exactly here there's an opportunity, here there's not an opportunity, and based on these opportunities, these are the options individuals have. That's really where I want to get to as quickly as possible. But when we're on the MT5, of course, I'll give people more examples, because I can see people saying, someone says impulse wave, I've got 1, 2, 3 people are saying price range. Of course, we'll look at more examples. Now, why today am I looking at trends? a lot of people I speak to, and they're looking at so many different types of strategies. For example, people I've spoke to, I spoke to somebody on Monday actually that was using the martingale strategy. I've spoken to so many people using mean reversion. I've spoken to people using the Elliott wave strategy, a million different strategies. Ladies and gentlemen, if you're a beginner, you're taking your first steps within the financial trading market, there is benefits, ladies and gentlemen, to trade into the trend and sticking to the trend. Now, people may say, well, that's an opinion. That's your personal opinion. It's not based on my opinion. It is based on statistics and it's based on facts, mathematical facts. And why am I saying that? I went on the MT5 and I tried to find the most volatile trend there is. And I've got to actually put a screenshot so people can see it. I put all the measurements there so you can see it, ladies and gentlemen. This is such a volatile trend. It is absolutely crazy. Very difficult to trade, but much easier because it's a trend. But look at this, very large impulse wave. Such a big retracement. That's actually almost a correction. Very large impulse wave again, very large retracement. Big impulse wave, okay, that's a decent size retracement, it's a normal size retracement. But you can see it's very volatile. I've found the most difficult trade and most difficult trend that I could possibly find. But even when taking this into consideration, look at the price movement in favor of the trend compared to the price movement, which is retracing. 1%, 0.75, 1.77, 1.52, 1.75, 1.06, 1.45. The price movement in favor of the trend is so much more. We've got over 6% in favor of the trend and almost half that against the trend. 68% of the volatility is in favor of the trend. 68%, ladies and gentlemen. Now that's more than 2/3. Okay, so it's like, for example, if I'm rolling a dice which has 3 sides only, and based on those 3 sides, ladies and gentlemen, let's say there's the number 1. On the second side, there's the number 1 again. On the third side, there's the number 6, and I roll it. Are you going to pick the number 6 or are you going to pick the number 1? Of course, you are going to pick the number 1. It's not an opinion, it's mathematical statistics. This is why, ladies and gentlemen, the trend is your friend. It doesn't mean as you become more experienced, you cannot start looking at mean reversion, start looking at martingale, start looking at the WD portfolio strategy as well. There's a lot of things you can take into consideration, but until you gain that knowledge and that expertise, which of course comes with time, then of course there is benefits to trading and looking at the trend. Let's continue. Like I said, I want to get to the strategy as quickly as possible. I've got a question here. I'll quickly read it. Just bear with me, guys. So this is a good question. It is said that the trend is your friend, but would you say that the range is your best friend because the big boys are loading up to take price up or down? Is the statement correct? Not necessarily. What I will say is the great thing about the price range is that it can set you up for the next indication and the next opportunity within the market. But the issue with price ranges, ladies and gentlemen, and by the way, I'm looking at a traditional price range. A traditional price range is very thin. There's not much volatility there. We're not looking at a reverting style price range, in which case it's up, down, very big price movements, but it's not in a trend. It's trendless. If we're looking at price ranges, the issue is there's not enough volatility for us to trade it. So that doesn't give us any opportunity. The second thing is it could move in either direction. And the third thing is, a lot of the time, we did a webinar last year. It was in November, the first week of December, I remember. And we looked at, I think it was almost 50 price ranges. And we looked at the breakout, and we looked at how many were false breakouts, and almost 70% were false breakouts. So again, you need to be cautious. The issue with price ranges is, number one, you don't know which direction it's going to move. Number two, it's trendless. Number three, there's not enough volatility within the range for you to take advantage of. And the most important thing as well, you need to be cautious about not getting sucked into the wrong direction and being sucked into what is known as false price breakouts. That's the only thing I'll be cautious about. What I'll do is I'll try and find the price range for you on the MT5. Well, there definitely is somewhere price range, and we'll look at it live on the price markets. And then we can look at different techniques that you can use to help with that. Now, traders follow the trend. So here I want to look at the difference between large institutions. Large institutions, number one, they're driving the market, and that makes them the most important thing. Okay, a lot of the time I say, I speak, like I said, I do a lot of one-on-one session, and a trader will say to me, I think the price is going to move here. I say, why do you think the price is going to move here? And he will say, I think the price is going to move here because interest rates are going to decline. And I say to him, yes, you're following the theory, okay? But something which is very important that you also need to think about, it's not about the theory. It's not about what you think is going to happen. The most important thing is, how do you think the institutions will drive the market? Will they drive it up? Will they drive it down? And to what price will they drive it? Because it doesn't matter how you think the price is going to move. It doesn't matter what the theory says. Institutions, they don't care about the theory. The most important thing is, how are institutions going to drive the price? Because I can tell you now, I guarantee you, a lot of the time institutions, they drive the price down because they want to purchase at a better price. They want to purchase what is known at the discounted price, okay? And they don't do it in an illegal way. They don't do it, for example, through slippage, through opening pending orders and then withdrawing their pending orders. They don't do it through illegal ways. They do it through legal ways. They'll say to themselves, let's wait it out, let's cash in, and then we'll wait till it gets to a better price. If it gets to a better price, it may or may not get to a better price. If it gets to a better price, we'll re-enter the market. This is what the big boys do. So institutions, like I said, the first point, traders, they follow the trend and make instant decisions. Institutions, they follow the trend, but give more importance to the entry. So they don't just necessarily look at the price and say, the price is starting to go up, it's gaining momentum, I'm going to speculate the increase. Institutions don't do that. They don't care if it's in an upward trend. They'll say to themselves, what is the true value of the asset? Is this a good price for me to be entering into the trade or not? This is what big institutions look at. This is what we're going to look at as well. And they will know their entry in advance, and they'll know their exit in advance as well. So we'll look at this on the slide, actually. We'll look at it on the chart on how they plan their price movement. Okay, it's very, very important. Institutions wants to benefit from the trend, but they want to buy at the lowest possible price. So, for example, if they think Apple stocks are going to increase in value, yes, they want to buy, yes, they want to take advantage of the trend, but they'll say to themselves, this is the price I'm willing to buy at, okay? So, for example, you may be purchasing a house, somebody may be selling it to you for 300,000, but you're saying to himself, yes, I want to buy the house, but I'm not willing to pay that. I'm willing to pay 250,000. He's going to say to you, I don't care, this is what I'm selling it at. You're going to sit there and you'll sit back and wait for that price to drop. And large institutions, they do that. Again, I've given this example here as well. Be cautious not to trade against the trend, okay? beginner traders, a lot of the time, they fall into two bad habits, okay? It's almost like it's human nature that if the price increases, instantly beginner traders want to speculate the decline. As soon as the price declines, it's like it's human nature, instantly all beginner traders, they want to buy because them say to themselves, the price is too expensive, it's going to decline at some point. The price is too cheap, at one point it's going to correct back upwards. And I'm sitting here and I'm telling you with 10 years experience, there is nothing guaranteeing that the price will correct, okay? If you're selling at the high, there's nothing guaranteeing you that the price will go back to that price. And yes, it may go back to that price in a year, maybe in 2 years, maybe in 3 years. That's useless. Why do you want, you're not going to sell hoping that it's going to go back to that price in 2 years. You need to profit now. CFDs is ideal for short-term trading, okay? You're not going to pay overnight fees for a year or a month or 2 weeks or whatever that is. You need to be able to determine how the price is going to move now. The second bad habit, ladies and gentlemen, is that, you know, a trader, they will look at the market and let's say they'll buy here. If it goes slightly in their favor, they'll close it. Then it goes slightly higher, they buy here. If it goes slightly in their favor, they'll close it here. Then let's say they bought again here, but then the price does this and they do not close it. And they made basically $5 here, $5 here, and here they're losing 5, they're losing 10, they're losing 15, and they're just keeping it open and open, just eats away their profit and can even end up with them seeing a loss. So those are two bad habits that beginner traders need to avoid, okay? So that's why today is so important. The trend, okay? The trend is your friend, as my good friend said a few minutes ago in his question. Now, people want to improve their analysis and look at more institutional indications. Because a lot of people say to me, you know, I want to use more institutional indications. Because yes, institutions, they look at the average price and things like this, but they don't look at RSIs, MACDs, they don't look at moving averages and things like this. But the issue is a lot of these very big professional tools, a lot of the time people have to buy them. Sometimes they're more difficult to find and so on and so forth. But people keep asking me about them. So I'll give you one which I think is going to be the easiest and cheapest for you to find. And that is the volume weighted average price. You can type it in on Google. It's very easy, very well known, much more beneficial and accurate than a simple moving average or exponential moving average. So it's known as the VWAP, the volume weighted average price. Let's continue, ladies and gentlemen. I've got some questions. Somebody says here, your screen is off. I don't think my screen is off. Nobody else has mentioned it, but it looks of it, it's okay. So maybe exit and re-enter. You should be able to see that the screen is on. I've got another question here. Somebody says here, is it advisable to trade the session breaks? It depends. It depends a lot on the asset. It depends on which break it is. Overlaps, of course, have a lot more volatility. It depends. Most theories, to be honest with you, they always say, allow the market to be open 30 minutes before you start trading. There's also another theory, which is very important as well. Never trade in the last 2 hours of the session. Now, why do people do this? And why is there such a theory? And I'll explain. Just gonna have some water. The issue is, ladies and gentlemen, is that when you get towards the end of the session, people avoid buying because they want to avoid what is known as overnight risk. Another thing, ladies and gentlemen, is when we get to the last 2 hours of the session, so where we're about to have the break or the overlap, people also start to close trades, especially day traders, scalpers, and things like this. So that's an issue, okay, because it creates volatility, can create false price movements, it can create an view of a certain value where that value isn't actually accurate, and also can create a lot of slippage as well because there's less orders within the market. Now, in addition to this, in the first 30 minutes, again, it can create a lot of volatility which doesn't continue. So that is something that is a very well-known theory, both the last 2 hours of the day and also the first 30 minutes of the day as well. So there's disadvantages to trading the overlaps of sessions. Of course, you have the ability to, you can do so. For me, somebody can be better at trading those than trading at other sessions. What I will say is there is benefits as well to trading only one asset and always trading it at the same time. What you will notice is there's a lot of well-known licensed educators. I know a lot of them in London because I worked in London as well for a long time, but there is all around the world. 99% of educators don't know what they're doing. Especially you see a lot of kids, young people, definitely ignore them. They've never been profitable. They're definitely not got licenses, that's for sure. But there is some good educators. And you always see them say, you know, I trade this asset between 1 o'clock and 3 o'clock. This is the gentleman in the UK. No, it's 4 o'clock, sorry. 1 o'clock and 4 o'clock. This is the time that he trades. And he trades the British pound against Japanese yen only in those hours. He never trades another asset. He never trades outside of these hours. Why? Because he wants to know fully the characteristics of the asset in that specific hour, in those specific hours. So that's something for people to take into consideration as well. Also, potentially going to help you with your question. Somebody says, please the VWAP again. Yes, I'll confirm in a minute. What is the most effective indicator that signals trend movement? We're going to look at that in a moment, ladies and gentlemen, because we're also going to go on to the MT5 as well. Let's not forget. So the VWAP, let's go back to the VWAP just a moment, and then we'll continue with this slide because we're going to start to look at the strategy now. VWAP, this is how it's written, ladies and gentlemen. It's an abbreviation. It's an abbreviation for the volume weighted average price. I'll write this down for this lady. Volume weighted average price. VWAP, very well known, such a respectable indicator. Basically similar to the moving average, but it gives more importance to the prices where most people are buying at. So for example, the moving average, if you're doing a moving average of, let's say, 5 prices, it will look at them equally, okay? So 20%, 20%, 20%, 20%. If you're looking at the VWAP and the average of 5 prices, what will it say? It will say 1,000 people bought at this price, 5,000 people bought at this price, 10,000 people bought at this price, and so on and so forth. And it will give more importance to where the price is obtaining attention and obtaining demand, because the indicator is basically saying if they're buying at this price, it's more important. It doesn't ignore the rest of the price, but it will give more importance to that price. And what it basically says is you are buying above where most people have bought. So you need to be cautious. Or you are selling below where most people have bought. So again, you need to be cautious. This is in regards to the VWAP. So let's start looking at a trading strategy. We're going to look at 2 trading strategies. I want to go through them quickly because I want to go onto the live platform and look at them live. So it's only in regards to trading the trend. We're only focusing on trading the trend. I don't want to hear or no, or look at any type of price movement. 2 time frames. We're going to use a 2-hour time frame. We're going to use a 5-minute time frame. If you're on the MT4, you're not going to have a 2-hour. Download the MT5. Why not? We pay for it for you and give it to you for free. So there's no difference between the two. Download the MT5 to get the 2-hour time frame. It's such an important time frame, one of the most important time frames. When I've worked with very large hedge funds and fund managers, they use that 2-hour time frame a lot, ladies and gentlemen. Indicators. We're going to look at 2 indicators. We're going to look at a 75 period exponential moving average. If people don't know how to put that on the MT5, I will show you in a moment. We're going to look at a 16 period RN, a 16 period relative strength index. People also have the option to make that an 18 period. It depends on how reactive you want it. You've got an option of both. A lot of people, because they want it less reactive in the beginning, as beginners, they opt for the 18, but you've got the option of 16 as well. And then on the 5-minute time frame, we've got an 8-bar exponential moving average, a 14-bar simple moving average, and we're definitely going to look at price action. So rather than me going through the wording and the theory of the strategy, I want to go straight and start looking at the strategy. Now, I'm going to give you an example on a chart, but I'm going to go into the MT5 in a moment and show it to you live on screen. So point number 1, ladies and gentlemen, this is our 75-bar simple, exponential moving average. This is our RSI, ladies and gentlemen. You can see the RSI has a period of, the level of 75, 50, and 25. Above 75 means it's too expensive. Below 25 means it's too cheap. If we're between 50 and 75, it's an indication that buyers are controlling the market. If we're between 25 and 50, it's an indication that sellers are controlling the market. If it's just hovering around 50, then we've got a neutral indication. There's no indication. If we're below the trend line here, sellers controlling. Above the trend line, buyers are controlling. So let's look at this scenario here, ladies and gentlemen. The price is definitely below the 75-bar exponential moving average, and we're also between the 25 and 50 as well. So that's an indication that, again, sellers are controlling the market. If you look at the low, the next low, and the next low, we very clearly have consecutive lower lows, and we've got lower highs as well. So we've got indications that sellers are very clearly controlling the market. The only thing to be looking out for is if you keep getting lower lows and lower highs, at some point it's going to get to a price which is so cheap that you really need to think to yourself, is it too cheap? Are people going to start to buy and want to take advantage of the lower price? So this is going to set you up, that 2-hour time frame. So I'm going to show you where to trade. It will set you up. So I know I want to take advantage of downward price movement and downward price movement only. We switch over to a 5-minute time frame. This is the 5-minute time frame here. We've got our 8-bar simple exponential moving average and the 18-bar simple moving average. Each time there's a crossover, as long as we're still seeing lower lows and lower highs, and we're getting crossovers. What's crossovers? Basically when the yellow crosses below the blue, not crosses above. For example, here we can see it's crossing above. We're not looking at that. Crossing above, not interested. Crossing above, we're not interested. Why? We're only looking at a downward trend because this is what's been indicated on our 2-hour time frame. So we're only looking at that downward trend. Where do we get a crossover? This is the crossover. This is the first crossover. This crossover is a downward crossover. That's the signal to sell. The price, ladies and gentlemen, is all the way down here. That's the next signal. That's the next signal. Both, again, the price is moving downwards. So that is, ladies and gentlemen, how you can look at the market and get a signal. Now, I also want to look at planning the price and price action as well. but I'm going to look at that on the MT5 because I want to focus on this strategy. So let's go to the MT5. Here is the MT5, ladies and gentlemen. Let's look at an asset. Let me think about what asset I want to look at. By the way, guys, people want to look at a specific asset, send me a comment. Send me a comment, guys. Let's look at, I don't want to pick the assets for you. You guys pick the assets, and of course we'll look at it. Now we've got here, ladies and gentlemen, two moving averages. Here, ladies and gentlemen, the red is the 75 bar. So here we got 75 is the period exponential moving average. The green is the 100 simple moving average. How do we input that on the screen? Very simple. Let's, for example, remove one of the moving averages. Let's remove it. Voila, we've taken away the green, the 100 period simple moving average. This is how I insert it. I go to insert, indicators, trend, moving average. Very, very simple. Then we can see here, I go to 100. I'm going to put it green. You can put it whatever color you want. Doesn't make a difference. And I want it simple. If I click enter, you can see it appears. Very, very, very simple. Let's see what people want to look at. Euro USD, British Pound USD. Some people, gold. Somebody said gold. Let's look at all of this, ladies and gentlemen. Let's go in order. So the latest was the Euro USD. Where's the Euro USD? I think I'll just type it in. I think that's the easiest I can do. There we go. Let's get rid of these lines. Perfect. So the Euro USD. Now, in regards to the Euro USD, ladies and gentlemen, there's a couple of things for us to take into consideration. The first thing I want people to take into consideration in regards to the Euro USD, before we even start to look at the price and the strategy, type in FinViz like this, go to futures, go to currencies like so. And I want you to see that the currencies are not conflicting, or do not, they may not be conflicting now, but don't start to conflict throughout your trade. Ideally, you want one to be increasing, the other to be decreasing, so it's not a conflict. Because if both are increasing, that's difficult to trade. If both are decreasing, it's difficult to trade because they're conflicting and the trend is less likely to form. Here, for example, we've got a good example where the US dollar is increasing, the euro is decreasing. Somebody also mentioned the pound against the US dollar. That's more difficult. So USD and pound both increasing in value. So you can see there that's more difficult. So Euro USD. So Euro USD, ladies and gentlemen, here we can see we're above the 100, the 75 exponential moving average. We're above the 100 the simple moving average, and the RSI, unfortunately, is more or less at 50. That's the only issue here, ladies and gentlemen. If the RSI, ladies and gentlemen, was higher, if the RSI was, for example, at 60, 65, that would have been a very clear indication that buyers are controlling the market, and we'll automatically straight away start to look at upward price movement. But because it's at 50, it's taken the signal to a neutral, which is not necessarily the best thing. And the other thing, ladies and gentlemen, is we've got a slight upward slope here when we're looking at the lows, and we've also got a slight downward slope here. So it's known as a symmetrical triangle. So this can basically break in either direction, because we've got a symmetrical triangle, not higher highs and higher lows. So that's a neutral signal. The other signal is the RSI. Again, it's at the neutral. So that's an issue, ladies and gentlemen. So we need to look at both breakouts. So let's go to the Euro USD. Let's go to a 2-minute time frame. People can look at a 2-minute, they can look at a 3-minute. I want to really be cautious of this level here, ladies and gentlemen. If I get to this level, I want to be cautious about it because we found resistance close to it here, and we found resistance here exactly at it. But if it goes to that price, the trend is upwards. So I don't want to trade against the trend necessarily, but I want to be cautious of that level. But if we break above this level, ladies and gentlemen, then we have an indication of upward price movement. But we need to be cautious of that very, very simply because it's on 3 occasions now got to that level. Something that, of course, I always say is the more times you're going to hit that resistance level, the more chances of it breaking. Because if you keep going to the resistance level, all these buyers become comfortable with it, and then they keep on buying on that 4th occasion or 5th occasion because they start to become comfortable with it. The downward price movement, if it does happen, will be more beneficial, more clearer. So there's 2 things people can do. They can either look at the breakout here, ladies and gentlemen, and trade the downward breakout. The other thing they can do, ladies and gentlemen, is draw Fibonacci levels here. If they draw Fibonacci levels here, then they've got the 65 level. So this is the 65 level here, you can see. And I'm drawing the Fibonacci level based on the high and the low. So if we trade at the Fibonacci level, the 65, that's also a signal. We're about to break that, by the way, ladies and gentlemen. If we do break that, then we're below here, the purple color is the 100 simple moving average. So below that, if we get a crossover as well, then that's a signal because we're below and we're getting a crossover. For example, here is a good example, ladies and gentlemen, where we were above the purple and we had an upward crossover. So if it continues to gain that downward momentum, that's a possibility. We're going to be below the trend line and we're going to have a crossover downwards, and that gives us a downward signal. Otherwise, Fibonacci points to this level, breakout levels point to that level for you to potentially trade. So that's based on the strategy, somewhere where you can trade potentially, where there's opportunity. The only concern, like I said, is on the 2-hour, we don't have a clear signal. And a lot of people say, well, what do I do? Look, if you're risk averse and you don't want to risk it, guys, there's no pressure to trade. Don't trade now. Don't trade today. To be honest, probably after the US session opens in 40 minutes, volatility will build and we'll start to get a signal. But either way, don't feel pressure. Maybe there won't be a signal today that's clear. It will happen tomorrow or the day after. So don't feel pressured. Like I said, the only issue is the RSI isn't pointing towards a signal, nor is the price action because it has a symmetrical triangle. Somebody also mentioned the British pound against the US dollar. Let's see if we can find that. British pound against the US dollar. Let's type it in, GBP USD. No, where is it? I've lost it. Let's type it in again, GBP USD. There we go. Let's go to today's price. Here we go, ladies and gentlemen. We've got mainly upward price movement, but the overall trend, ladies and gentlemen, is pointing to the pound declining. Now, there's 2 things for us to take into consideration. If we get a breakout of this level here, ladies and gentlemen, we can trade potentially and aim for that trend line. But this is actually an area of the market where we have clear indications of downward price movement. We're trading below the trend line, we're trading below the sentiment line, and we're trading below the 50 on the RSI. The only thing I'm going to say here is that it's been declining every single day, ladies and gentlemen. The whole of the chart here, which goes all the way back to the 15th of July, it's been declining. Very clear, straight downward trend. So because it's consecutive and it's been a very long time, the only thing you need to be cautious about there is that it's not the end of the trend. That's the only thing to be cautious about. Nonetheless, I'll show you where signals potentially are in regards to the trend. Now, again, I'm drawing the Fibonacci levels. This is a 2-hour time frame, so it's more for swing traders. If we have somebody looking to hold the trade for 24 hours or 48 or 74, this is something that can take into consideration. So the 65 is here. If it drops and breaks below that blue, that's where we start to speculate the decline. Alternatively, ladies and gentlemen, again, you can go to a 2-minute time frame. We go to a 2-minute time frame, again, go GBP USD, like so. Ladies and gentlemen, very clear support level. Is it going to break below that? That's definitely something we need to look at. Is it going to break below that level? So that's one option. That's one opportunity. That's one option. Fibonacci levels, of course, we can draw as well. That's perfect. That brings the Fibonacci level right to that resistance level. So this is another level you can take into consideration. So we've got breakout here as well, ladies and gentlemen. Trend is above the trend line, the price movement. This is on the 2-hour. So that's something we need to take into consideration as well, of course. The only thing to be cautious about, because this is a price range moving sideways, is we're not going to get a false breakout. So that's something for us to take into consideration as well. Then somebody also said gold. Let's look at gold. It's at the bottom, if I remember. There we go. Let's get rid of these take profits that we looked at as the price was declining. Hit all of those take profits. Here, ladies and gentlemen, we've got conflicting signals. So this is like the Euro USD. It's not a clear signal because the price is increasing, but we're below the trend line, below the sentiment line, below the neutral on the RSI. So that's conflicting. We need to wait for a clear signal. If it starts to decline again, so again, we can look at Fibonacci levels here. So if it declines below this blue line here, then that's where signals will be very clear in favor of the downward trend. Alternatively, we can look at smaller time frames like this and say to ourselves, when is the trend going to change? So for example, if it's going to break below this level here, that's something we can take into consideration. Then we've got the next level here, so we can look at these breakouts. Alternatively, again, we can draw Fibonacci to bring the breakout slightly higher. So if it drops below there, that's one trade to speculate. This is the next wave here, and then we've got 65 there as well. So, and alternatively, you can look at that breakout rather than waiting for that breakout of this lower level here. The reason why we always try to look at slightly higher breakout, slightly earlier breakout, is because we want to avoid trading so late, because then there's a higher risk of the price moving against us. We want to trade earlier. So rather than trade the breakout, and I'll show you a past example, instead of trading here, ladies and gentlemen, you've missed most of this upward price movement. You've missed so much of it. You're speculating less than half of that impulse wave. This is what you're trying to benefit from, that there. Whereas you had all of that price movement. So instead of doing that, we draw from here all the way down like so. And instead of trading up there, we trade all the way down here. So that's a much better entry point, because now, for example, that profit, ladies and gentlemen, that's an upward tick of 0.20%, whereas previously it was, for example, here. So instead of 0.20, it's 0.12%. So a very big difference. 12, 20, very big difference. If we're going to get a continuation of the upward trend, it's retracing. Still following the upward trend pattern, ladies and gentlemen. So we're drawing the Fibonacci at this level, and that's our retracement here. So that's the Fibonacci level here. It brings it here rather than the breakout up here. So if it increases above that, that's an opportunity, and that's the signal for the upward price movement. I've got another question here. Can we look at the US dollar against Japanese yen? Yes. Somebody says about the webinar recording. Yes, of course, it will be uploaded on YouTube. When you are trading a stock like Tesla, are you trading lot size or are you trading number of shares? The best thing for you to do is go to the app and look at what it means in terms of money. Okay, because either whether you're looking at a contract size or if you're looking at the share, the important thing is the money worth. Okay, That's the important thing, because you're trading with leverage. Another question here. Some people says it wasn't it 5 minutes. You've got an option. You can look at 5 minutes and you can look at 2 minutes. You can look at 6 minutes. You can look at 3 minutes or 4 minutes, but it needs to be in that bracket. Okay, so not, for example, 30-minute, 1 hour, 15 minutes. It needs to be in that bracket. Some people prefer the 1 minute time frame. It's absolutely fine because we've got scalpers, for example. But it needs to be in that bracket, definitely. 5 minutes is an opportunity as well. Gives very simple, very similar targets. So for example, again, the retracement here. If it crosses above here, you can see it's a very, very similar entry point. Very similar. Somebody says, what can help trade the trend for stocks? What I will say is, if you go to type in on Google NASDAQ components, like so, you go to the first website here. What you can also do is look at the performance of each individual stocks. If most of these are green, that's an indication of upward price movement. Most of them are red, it's an indication of downward price movement. And also, some people say, it could be green, but then it may change. You need to keep looking at it again and again and again while trading. When you become more experienced, you'll get the hang of that as well. Because yes, I'm looking at this and saying, okay, yes, everything is more or less green, but I'll look, this is 2%, this is 2.5%, this is 2%. I'll monitor it. If is the gains getting larger, is the gains getting weaker, and I'll keep monitoring. Are some of them are going to start to turn red? Again, I'll keep monitoring again and again over days and days and days. But the best thing, like I said, if you're trading one asset in one session, you're really going to get the hang of it much, much quicker. Somebody says here, how do you see that institutions are the market? What do you mean by that? What exactly is the question? Please clarify, and of course, I will answer the question for you. Let's go to the NASDAQ, since somebody mentioned stocks. So here we have the NASDAQ, upward price movement, trading above the RSI but below the trend line. Also had a major resistant level here. Unless it's going to start to trade above these lines here, so the trend line and sentiment line, either or both, then we're not going to get a clear upward signal. Same thing for downward price movement. If we're going to get indication of downward price movement, we need the RSI to drop below the 50. When potentially may that happen? We can look at the breakout here, breakout here. Can look at the price rejection, but better to look at the breakout, for example, here. So those are two breakouts you can take into consideration. And it's always about, look at the alternative. Maybe those are the breakout levels. Maybe you want to also look at an earlier entry. So you may draw a Fibonacci here and the breakout at 65, which is there. So these are 3 entries. And may say, my stop loss is going to be here. And then I will buy if the price keeps increasing above the trend line here. So you can see exactly what I'm doing, ladies and gentlemen. I'm always looking at, before I've even entered the trade, I've got a full plan. I know trade 1, trade 2, trade 3, stop loss. Of course, we can look at targets. So for example, here to here, let's do it the other way. We can, for example, do here to here. Target is, that's where my take profit is, there. Then we can look at the next Fibonacci level, so between here to here. Then we can see my take profit is here, ladies and gentlemen. So I'm doing multiple exits, multiple entries as well. I know where my stop loss is, I'm going to honor it, and I know if it keeps moving in the opposite direction, yes, I'll close with the stop loss, but also I'll take advantage of the new direction, rather than saying I was wrong, I don't care, I'm going to sit back and wait, I'm not going to open any other trades, and I'm going to wait for it to move back in my direction. It may not move back in your direction. And it's not, people say to me, what's the strategy? And may say to me the next day, the strategy didn't work yesterday. the most important thing about the strategy is being able to keep up with it, because the strategy may now be to sell, it may change and be buy, and then will change and become sell, and it keeps changing again and again and again and again, and it's about being able to keep up with it. Amend, close, open, amend, close, open. This is what trading is all about. So if you're going to follow a strategy like this, follow it not for a day. It doesn't have to be on your real account. Follow it on the demo account. Do it for a month, do it for 2 months, do it for 3 months, and you really will start to get an understanding of it, ladies and gentlemen. So guys, let's end today's webinar. I will end with a poll, because we've been speaking, ladies and gentlemen, for an hour and 5 minutes. So I don't want to keep people here too long. Let's have a poll, and if also people have questions, feel free to help and free to ask. Let's launch this poll. Which currency will be the best performing currency in August? What do I mean? The whole of August. So by August 31st, which is going to be the best performing currency of the month? And I put the performance of the last 30 days. So it's not August so far. This is how much they've increased or decreased. I'm basically saying in regards to the past 30 days, this is the best performing. Let us know what you think is going to be the best performing by the end of the month. %30 of people have answered, 37%. 41. Let's get at least 60 people answer the question, answer the poll. If we get 60 people, I will confirm to you what everybody voted. Otherwise, I won't confirm it to you. I'm just joking. We got 52, 55, 57. Come on, if we can get 2 more people, 1 more person. We're currently at 59. Let's see 1 more person vote, and then I'll confirm what everybody thought. Still at 59, guys. There we go, 60. Great. So let's close. 50% believe the Japanese yen will be the best performing currency by the end of the month. 38% believe it will be the euro. 8% believe it will be the dollar. 4% believe it will be the pound. 0% believe it will be the Swiss franc. Let's of course see what everybody, which people were correct. Let's see which people were correct. Someone has asked a question. That's why I'm stumbling. Because I'm trying to read at the same time. It says, what's the website where we look at the currency? Type in FinViz, like that. FinViz. And then you go FinViz, and then you go to futures. You can't see my screen. Bear with me. There we go. So we type in FinViz like this. We go to FinViz, we go to futures, we go to currencies. And it shows you the currency performance, not against just one currency. Currency pair is weak as an indication because it's just the value against one currency. So for example, the Euro USD may be increasing, but the euro may be declining against every other single currency in the world. So the euro is not really increasing in value. This, though, ladies and gentlemen, will help you really understand the true value and true price action of the asset. So this, ladies and gentlemen, here will show you the US dollar index, the euro index, Japanese yen index, generally speaking, 8 currency indexes. So hopefully that answers your question. Let's end today's session, ladies and gentlemen. Enjoy the rest of your day. Trade safe, trade responsibly. We will have, of course, more upcoming webinars. If you have questions, feel free to ask, guys. Of course, send me an email, send a request to your account manager to have one-on-one sessions, that's absolutely fine as well. Otherwise, we'll speak again at our next session. In the meantime, goodbye. Trade safe, trade responsibly, as always, and we'll speak again very soon. In the meantime, goodbye.